मार्केट लीडर में आपका स्वागत है। मैं हूं जॉनील मुखर्जी। आज हमारे साथ जुड़ रहे हैं एक खास मेहमान। हमारे साथ जुड़ेंगे मार्क फाबर, जो एडिटर और पब्लिशर हैं ग्लूम, बूम और डूम रिपोर्ट के। वो जाने जाते हैं पूरे विश्व में एक ऐसे इन्वेस्टर के रूप में जो बता देते हैं कि कहां पर इकोनॉमी जा रही है, कहां पर बाजार जा रहा है और कहां पर आपको पैसा लगाना चाहिए। मिस्टर फाबर, अ वेरी वार्म वेलकम टू यू। लेट मी स्टार्ट ऑफ बाय asking you what you think about the US markets right now, because everyone is watching that, what the Federal Reserve is doing. The bond buying program continues, but will it really help the economy?
Well, basically, it hasn't helped the broad economy in any particular way. Of course, the neo-Keynesian who advocate money printing and large fiscal deficits, they would argue that had the bond buying programs and the monetization and the huge fiscal deficits not been implemented, then the economy would be in a far worse shape. But there is no empirical evidence that this would be the case. In fact, I would argue that when you print money, the money is not evenly distributed in the system, so it flows to the people closest to the money printing, namely the financial sector, the banks, the hedge funds, the fund managers, the well-to-do people that own assets. I could argue that the money printing, if anything, has benefited maybe 1% of the US population, or maybe 0.5%. And for the majority of households, it's been a disaster.
Mr. Faber, you're right, absolutely right, because many analysts believe that quantitative easing, helped emerging markets make highs. But what is your assumption? Because many people are saying probably quantitative easing might stop by next year or be tapered off. Do you see that a possibility? Because Mr. Ben Bernanke always says that if the data becomes better in US, he will start tapering it off. But will that be a reality?
That's a very good question. Because in my view, I don't think they will stop with their asset purchases, because they are very market oriented. And as you said, it seems to me that the world has gone mad, in the sense that the whole world is happy if stock markets go up, and they think that this creates prosperity, and that markets that wouldn't go up would be a disaster. 90% of Indians, or maybe 98% of Indians, they don't own any shares. They don't depend on the stock market moving up. In Thailand, it's the same. It's 1% of the population that owns any shares. In America, most of the shares are owned by, say, 3% of the population. So the majority does not benefit from a rising stock market at all. And don't forget, rising home prices are good for people that already own a home. But for the many people, say you're a student, you finish your studies and you have to go and buy a property in Mumbai, then the high price is a disaster.
Mr. Faber, because we've seen that S&P is close to 1700 in the US, and we are seeing that the 10-year yield bond, if you see, is at about 2.6%. Do you think these are the levels which can hold, or there will be a crack sometime?
In my view, we had a correction in June, and from the June lows, we rallied very strongly to a new high. But the new high was not confirmed by numerous technical indicators. And I would think that the market is actually quite vulnerable, and that we may have a more significant correction starting either right here, or maybe in a few weeks from a higher level, whereby, in my view, the higher level would be reached with very few stocks pushing up the index, because we have had many breaks in important stocks like Oracle, Microsoft, IBM, and so forth. And so it would be my impression that the market has more downside risk than upside potential. And I have been relatively positive for both the US market and for emerging markets since the lows in March 2009. And actually yesterday, I said for the first time that traders should short the S&P, but have a stop loss order of 1,720.
Mr. Faber, what about the Eurozone? Do you see stability coming back there? And what about other markets like China? Because in emerging markets in India, should we be looking at the Eurozone more or China?
I think for all emerging economies, it's far more important to watch the economic developments in China than in the Eurozone. The Eurozone will hardly grow or even contract, but it's not going to be a growth region. China is different. Either it continues to grow at, say, around 8 to 12%, as in the last 20 years, or it doesn't. If it doesn't, it has a huge impact on the demand for raw materials, and in turn, the raw material producing countries, whether it's Brazil or Australia or the Middle East or Central Asia, Russia and so forth, if raw material prices go down, they have less money to buy goods from other countries, and so you have a downward spiral. In my view, and this I maintained now for the last 6 months, the Chinese economy at the present time, if everything was measured and calculated properly, the Chinese economy would grow at maximum, and I'm saying maximum 4% per annum. So it's a meaningful slowdown.
यहाँ पर हम लेते हैं फिलहाल एक ब्रेक, लेकिन हम खास चर्चा जारी रखेंगे मार्क फाबर से। आप भी बने रहिए हमारे साथ। Mr. Faber, in the emerging markets, we are seeing a lot of money is being pulled out, and India is no exception. How do you evaluate India in the emerging market space?
Well, basically what has happened is, in the case of most emerging markets, they have grossly underperformed the US since the months of April 2011. So emerging markets have gone down or moved sideways, and the US has gone into the sky. Now, at some point, this underperformance of emerging economies will reverse. In other words, at some point, you want to go back into emerging market stocks and avoid the US. I'm not sure we're there. I think the outperformance of the US could continue to last for some time, whereby this doesn't mean that the US goes up. The US market may go down, and emerging stock markets may go down even further, whereby we then also have to say, how do we measure the performance of a stock market? As you know, in India, from the peak in 2008, we're down about 9% in rupee terms. But in dollar terms, we're down something like 40%. So how do you measure the performance of markets? That is an important consideration.
Mr. Faber, correctly, and rupee has been a thing that the RBI and everybody is trying to tackle in India. What is your assumption? Why is the dollar outflow happening? Why are people pulling out money from India? Because in the last 2 months, June, July, when we see the data, about $3 billion has been pulled out of India.
Yes. I don't think it's only foreign money that is being pulled out of India. I think all you have to do is to open a newspaper and look at the quality of the government in India. And then, and I'm saying this, I'm the chairman of an India fund, and we've been an early investor in India. But I would say what is a miracle in the world is that India has developed despite of its government. And I would say the government needs to be cleaned up. and the politicians need to be cleaned up, and then the country would do far better.
So do you think that, the rupee will be under pressure with the dollar because dollar is strengthening against all currencies and all these steps?
Well, the dollar, surprisingly, has been weak against the euro, surprisingly, because all you hear from the great US empire is energy self-sufficiency, natural gas leading to huge retooling in US industries, and yet the dollar is weak compared to the euro. So I just wonder, why is the dollar weak? But it is true that the dollar has been relatively firm against emerging market currencies. That I concede.
Mr. Faber, what is your assumption now with, we've seen a lot of money that has moved out from emerging markets. Is it going to some other asset classes or is it going back to the US? What is your assumption?
Well, for the last 6 to 9 months, when I travel around, I hear basically that the US is the only game in town. Now, a year ago, in May 2012, the European markets bottomed out, and some of them have actually outperformed the US over the last 12 months. And Japan has outperformed the US since last November. So I think that when people talk about markets and stocks, we are in an environment where different markets and sectors of markets and individual stocks will move to a different tune. In other words, some stocks will go up and some stocks will go down, and some stock markets will go up and some will disappoint. And I think it's a rather challenging environment for investors. My strategy is basically to wait until the emerging markets kind of find a low, a bottom. I don't think we're there yet. And then go back into emerging economy stock markets.
So what kind of a correction would you be expecting in a market like India?
Well, as I said, in India, either the stock market could go down if the rupee stays here or even strengthens. On the other hand, the stock market could go up and the rupee goes down. I don't think you'll make a lot of money in India in the next 6 months. I mean, I have money in India, but I think it's not going to give you a high return. And a few years ago, I was asked by someone in India, what is my expectation of stocks in India? And I said, well, I think if you can make like 6% per annum, you should be very happy. And I still maintain that this is essentially what you should expect from Indian stocks going forward.
So, Mr. Faber, then does that mean that, Indian index, Sensex, will not be making a new high this year? At least that's what we assume from what you're saying?
The Sensex could go to 1 million, to 1 billion, if the Reserve Bank of India continues to pursue irresponsible monetary policies that essentially lead to a weakening of the currency. So I don't know where the index will be. As I said, you have to choose between a strong currency and a weak stock market, or a weak currency and a strong stock market.
मार्केट लीडर में फिलहाल लेते हैं एक ब्रेक, लेकिन इस ब्रेक के बाद खास चर्चा मार्केट लीडर मार्क फाबर से जारी रहेगी। बने रहिए हमारे साथ। Where will you be personally allocating money in the emerging market space?
Well, as I said, I'm basically waiting to buy, and I think that a buying opportunity will occur, but maybe it's only going to be in a year's time or so. I always point out to investors, there are two factors that lead to success as an investor. One is a disciplined approach in terms of asset allocation and valuations of equities, and number two, patience. And sometimes you have to be patient and wait for a good entry point. I don't think we're there yet.
Well, just to tell you that, Mr. Faber, Goldman Sachs yesterday itself has downgraded India to underweight. I wanted to understand from you, do you agree with that? Because, you know, they're saying that it's not catastrophe, yes, but they think that the underweight rating is what describes India right now.
Yes, I wished every bank and every broker in the whole world and every strategist had a sell recommendation on India, and then stocks would become cheap, and then we could buy at reasonable levels. So I hope there are many more Goldman Sachs out there who will downgrade India.
So what you know, in the next 3, 4 years, 5 years, where do you see India, you know, in terms of performance?
Well, I don't think that the market will perform particularly well, but I don't think that the global markets will perform particularly well. And it will depend on money printing. As I said, if you print enough money, everything goes up, but maybe not the real economy, because when prices go up, wages may go up less than prices. So in real terms, wages go down. And then the purchasing power of money diminishes, and people have less money to buy cars and homes and appliances and so forth and so on. So you can have, when you print money, stock markets can go up, the currency can go down, and the economy can go into depression. It's a wonderful medicine that is repeatedly applied by central bankers.
Mr. Faber, you've been in the past, you know, very correct on where the gold would move, and we've seen gold coming off the highs. Is it a good time to buy gold now instead of equities? Do you think that?
Well, if you look, say, at the US stock market, most stocks are on the high side, and in the meantime, gold shares and the price of gold are down. The price of gold is down almost 40% from the highs in September 2011. And everybody is recommending to sell gold and saying it will go down to less than 1,000 and so forth. I don't know. But all I'm saying is I want to have some assets outside the banking system and outside of financial assets, because I think that one day we will have again a systemic crisis, a sovereign debt crisis, where essentially financial assets will be decimated, and hopefully all the central bankers will be fired, hopefully, or hanged. But that may not happen very soon. So I want to own some gold. And the gold shares, by historical standards now, are extremely depressed. So I think that's a group of stocks. And I said early on, we're in an environment where different stocks and different sectors move at different times. That would be now a sector that is very depressed.
Mr. Faber, what do you think that the central bank here in India can do? Can it cut rates aggressively? Will that help? Do you think that's a possibility?
Yes, they can do that. Then they can kiss goodbye to the value of the rupee. Let me remind you, the rupee was pegged to the US dollar in 1947 at 1 to 1. We're now at 60 to 1. They can go to 600 to 1, to 6,000 to 1, to 6 billion to 1. Just continue to print money and have large fiscal deficits. That's a perfect medicine by the neo-Keynesian.
Mr. Faber, you know, the Indian government is saying that they're open to, they're talking to pension funds, long-term external commercial borrowings could happen so that more money comes into a market like India. Do you think those steps can be taken so that more money comes into India?
Yes, possibly. But the money will only come into India once the government has more disciplined economic policies. In other words, I would suggest that the budget should be balanced and that the money creation should be very, very limited. In other words, my target, if I were running a central bank in India, I would rather have interest rates in real terms that are high and have stock markets that are relatively low, but see to it that the economy functions properly and that my monetary policies benefit the majority of people and not just a few stock speculators.
How do you peg India as compared to the other emerging markets in the next 1 year? Do you see a possibility that Indian markets could outperform if the fiscal deficit, current account deficit is actually capped?
We don't know which emerging market will outperform. I'm not sure that India will outperform an emerging market index. It may just perform about in line with the other indices. In general, I think that the emerging markets will move lower. Which one will be the worst performer and which one will be the best performer? I'm very sorry, I don't know.
Thanks a lot for taking out time and talking to us today.
Yes, it's a pleasure. Thank you very much. Bye-bye.
थैंक यू। सो वो थे मार्क फाबर जो बोलते हुए कि मौका है फिलहाल भारत में निवेश करने का, लेकिन उनको लगता है कि यूएस मार्केट्स में आप थोड़ा सा मुनाफा वसूली देखेंगे, प्रॉफिट बुकिंग आएगी और फिलहाल उनको लगता है उसका असर आप दूसरे मार्केट्स में भी पड़ते हुए देखेंगे। काफी हद तक फिस्कल डेफिसिट, करंट अकाउंट डेफिसिट अगर कंट्रोल में होता है भारत में तो आप देखेंगे कि भारत की इकोनॉमी फिर से परफॉर्म कर पाएगी। उनको लगता है कि मौका आपको सोने में मिलेगा, सोने में आप निवेश कर फायदा कमा सकते हैं। बहुत बहुत धन्यवाद आज मार्केट लीडर टीम।